So, speaking a little bit more on the commentary side, and going into some of the items that you're including in the commentary, for the past several months, you've been including those economic lessons, which I noticed were kind of transitioning, probably about June or July of this year. You start transitioning into more of lessons rather than just the commentary on the market. And that's a great source for professionals who maybe are not as familiar with the secondary market, or not as familiar with what's happening with inflation, the bull market, the bear market. So what areas should industry professionals be looking at to keep pulse of the market? Obviously this commentary portion, but where are you getting the inspiration for these lessons?
Well, it used to be much easier to put in theoretical information, like why, when bond prices go up, why do rates go down, or what is a basis point, or how the mortgage-backed security market works, or why it's liquid, or how things work. Right. But as the news magnified, as more news came out every day, I became less able to do that because I was busy talking about what certain investors were doing rather than necessarily why they might be doing it. Lately, the news has died down a little bit, and when it does, I'm able to put information in there to help people on a more theoretical basis. I like doing that because it gives people a foundation upon which to build some knowledge, because they may not, I could throw stuff all day long at you in terms of, Citizens is doing that, and Chase is doing this, and Wells Fargo, yada, yada, yada. But to have that information about how our market works is very important, because if you think about a typical mortgage lender, whether it's a bank or a credit union or an independent mortgage bank, there are a lot of people involved in manufacturing loans, and they may not know what happens farther down the manufacturing line, or once the loan funds, they say goodbye to it. But there's a whole different thing that happens with regard to servicing and investor reporting and foreclosures and delinquencies and what happens to that loan. And so I think it's important for people to have kind of a more holistic view of what we do, rather than just sit there in their silo and underwrite loans all day or process loans all day. Loan officers themselves they face this every day because they are in effect running their own little business. They are dealing with borrowers. They're dealing with, behavioral economics. They're dealing with psychology. They're dealing with that. But on a bigger scale, they're dealing with interest rate movements and the housing market and the global economy. And so they're trying to run their business with an eye on all of these things. And so it's not easy to do. Yeah. So I try to help people see that there are other parts of our industry that they might want to be aware of.